All right, let's talk Delta Airlines. They just dropped their Q3 2025 earnings, and wow, the stock absolutely took off, soaring on some massive volume. So today, we're going to unpack those results and figure out what exactly has investors so incredibly bullish. And when I say the market liked the news, I mean it loved it. Delta's stock shot up over 4% on the day. And get this, trading volume was nearly 3 times the average. That's not just a little bit of noise, you guys. That is a powerful, powerful signal from investors. So what's going on here? What did investors see that lit such a fire under the stock? For an airline, these earnings beats can sometimes fade away pretty quickly. But this move? This feels different. It signals a real shift in how people are thinking about the company. Let's dig in and find out why.
Okay, so here's how we're going to break it all down. First, we'll look at the blowout numbers themselves. Then we're going to dissect the premium strategy that's really fueling this thing. After that, we'll check out the company's outlook. And finally, we'll wrap it all up with our take for the next call.
First things first, the numbers. And honestly, the story here is pretty simple. It was a clean, decisive, and really strong beat on both the top and bottom lines. I mean, just look at this. The company delivered adjusted earnings per share of $1.71. The Wall Street consensus was sitting around $1.53. That is a huge 18-cent beat. And on the revenue side, they brought in nearly $16.7 billion, just sailing past expectations of $16 billion.
Now, this wasn't just a beat. This was actually a record-setting quarter for revenue for them, up a solid 6% from last year. This kind of strength is really the foundation of the whole bull case, and it all boils down to a very, very specific strategy.
Yeah, this kind of performance, it wasn't an accident. It's the direct result of a multi-year focus on high-value customers. It's what we're calling the premium playbook. And you don't have to take my word for it. Management is incredibly confident that this trend has a long, long way to go. As they put it, once a customer tries a premium product, they tend not to go back. And with retention rates in the mid-80s, well, that's what you call a sticky customer base. And the numbers totally prove this out. Just look at this divergence. Premium revenue jumped a healthy 9%, while revenue from the main cabin actually fell 4%. You see what's happening here? This is the strategy in action. Delta is actively swapping out lower margin seats for high margin ones. And premium is not some little niche business anymore. It is now driving 43% of all their passenger revenue. In fact, management actually expects it to become the majority revenue source as soon as next year. That's a fundamental shift in their entire business model. It's a huge deal. So this incredible growth is really supported by a few key pillars. Corporate sales are bouncing back strong. That high-margin loyalty revenue they get from their American Express partnership, it just keeps climbing. And get this, they're physically re-engineering their planes to add more premium seats, all while management confirmed these are now their highest margin products.
Okay, so a strong quarter is great, but Wall Street is always asking, yeah, but what's next? Well, management answered that question with a very, very confident forecast, signaling that they believe this momentum is absolutely sustainable.
Their guidance for the fourth quarter is for earnings between $1.60 and $1.90 per share. Now, what's really remarkable about that is that it's on par with their strong Q3 results. Historically, that's pretty unusual, and it's a clear sign of strength. This brings their full-year outlook to right around $6 a share, with massive free cash flow generation. And they're putting all that cash to really good use. The company is targeting gross leverage of less than 2.5 times by the end of the year. This just underscores their commitment to building what they like to call a fortress balance sheet. So, let's put this all together. You've got a decisive beat, you've got this premium strategy that's firing on all cylinders, and you've got super confident guidance. So, what's our take for the next call? Our rating is outperform. We believe that Delta's relentless focus on the premium consumer is creating a really durable competitive advantage. This shift in their customer mix is a powerful engine for margin expansion, and we think the market is finally beginning to price in this superior execution. So, for a potential trade idea, the objective here would be to isolate Delta's unique outperformance. The structure could be a pair trade. Go long on Delta's common stock and short the Jets ETF, which tracks the broader airline industry. The whole rationale here is to try and neutralize the general market and industry risk, creating a position that profits specifically from Delta's ability to execute its premium strategy better than its peers.
Now, the key question is whether Delta can maintain this premium momentum, especially if the broader economy starts to slow down. That is exactly what we'll be watching for on the next call. And as always, this is not financial advice.